So this is Startup Grind. We do a once a month meetup where we interview awesome founders. It's all intended to connect, educate, and inspire other founders. This month we have Will Zell, and Will is an interesting guy, and he's got a background as sort of a serial entrepreneur, having done several things, starting several businesses, and we'll have to dive into that because they're all super interesting in their own ways. But yeah, tonight we're just going to do some interview and for about a half hour to 45 minutes, and then at the end there'll be an option or a little bit of time for some Q&A. But thanks everybody for coming out. I guess we'll go ahead and get started. Will, welcome.
Thank you, Lucas. Great to be here. Fan of yours.
Oh, thank you. Appreciate that. The rare fan. No, I'm just kidding. So man, I feel like there's so much to talk about with your story and journey and stuff. And I think there are a couple things that I noticed about you when I was like doing some background research. And one of them is that you seem to have gotten started pretty young in entrepreneurship, or at least like starting to do things. Like, I think, did you run for like city council or something in your hometown? You grew up in Bell Fountain, right?
Yep. Yeah. Still live in the Bell Fountain area. Yeah. I ran for city council when I was a senior in high school.
So first off, that's wild. How did you get this idea, or like what kind of planted that as an idea in the head of a high schooler?
Yeah, it's interesting. It was actually, I would say, my first entrepreneurial decision that I made in life. So even though it wasn't directly related to starting a business, there was this kind of defined path that said, go this way. And I was on that path, and then opportunity arose this way. And after a little bit of consideration and being very naive, I'm like, all right, let's go this kind of weird, crazy way, and forget, moving to Ohio State, the Columbus campus, and stay in Bell Fountain and run for city council. So, it was one of those things where, and I think part of it's just kind of the way people are wired. I looked at, a problem that existed in my community, or at least that I believed to be a problem, and thought, you know what, I can help solve that problem. So let's do it and figure out the rest as we go.
Super interesting. Did you sort of learn entrepreneurship or that sort of entrepreneurial drive from somewhere? Or like, what would you say kind of like influenced that in you, or was it just something that was innate?
Yeah, it's a good question. So my grandfather started a business in construction. So I had grown up not kind of directly connected to the family business, but it was there at least in the background. And then frankly, I think a good portion of like the willingness to just make the decision is more innate wiring. And then thankfully, so from, running for city council as a high schooler to starting my first business in my early 20s, I was thankfully able to connect with a few really great mentors that said, okay, we have this like young kid that's making these crazy decisions, let's kind of guide him to starting businesses. Like, what do you think of, how do you want to impact your community over the long term? And I went on this journey, and a lot of that really ultimately led me to becoming an entrepreneur in the true sense of starting businesses.
That's interesting. It's always interesting to ask people like where they kind of learn it from, because usually there's some kind of thing at an early age that kind of pushes you in a direction. But so before we get too deep into like the story, I think it might be helpful just at a high level to just tell people how do you sum up kind of all the things that you do these days?
Yeah, it's a good question. So, by background, I'm born and raised in Central Ohio, as Lucas mentioned, in Bell Fountain, so northwest of Columbus, and still live in this area. Started my first business in my early 20s, now in my late 30s. So have been at it for a while. And really kind of everything for me congeals around, having problems that I see and that I believe exist in our society, and figuring out ways to solve them through an entrepreneurial path, through the path of creating businesses and, generally leveraging technology, but not always, but leveraging technology to solve those businesses. So I live and I love being on kind of both sides of the table in the startup world, getting in as an operator and starting a business from scratch and figuring out how to get it going or not, or shutting it down. And then also, and most recently on the investor side, and coming in and really being able to partner with entrepreneurs who are doing the same and figuring out how we can deliver not only capital that is greatly needed, but also just our experience, my experience as being a founder myself.
Yeah, and I think people probably are gonna be curious. I definitely want to dive a bit into the Zell Capital a bit later, but I also just like at a high level, do you want to just tell people kind of like what is Zell Capital and like how do people participate in it and the intent for it?
Yep, and we're going to talk a lot about investing. I do want to say I'm not a financial advisor, and I'm not giving any financial advice. In fact, I want people to always think about startup investing with eyes wide open, and understand the risks associated with it, because it is becoming so the opening of startup investing, venture capital investing, private markets in general, is a world that's opening up to tens of millions, hundreds of millions of investors that previously have not had access to it. And for me, that was the fundamental driver behind launching Zell Capital. So for the last decade, I knew that I ultimately wanted to be primarily on the investor side of the table, but wanted to approach it differently. I wanted to figure out a way how, if you look at the United States today, 87% of households in the US do not qualify as an accredited investor. Therefore, they legally did not have many great ways, if any, to invest into private companies like startups. And I believe that I understand why those regulations have existed in the past, but I also believe it's time to come up with more marketplace solutions for them and regulatory solutions. So we set out with Zell Capital to create a type of fund. It's kind of a hybrid between a venture capital fund and a mutual fund. It's a SEC registered fund. But in essence, what it does is it provides the fund investment opportunity to any adult in the US, and we set the minimum investment at $1,000. So typically in a venture capital focused fund, you have a small number of investors and very large checks that are required. And often, it's from high net worth individuals and institutions. We kind of flip that on its head. So we can have an unlimited number of investors in our fund. We set a reasonably low minimum investment from my perspective to make it accessible. And as we build our fund, what we'll do is we'll go out and invest in seed and Series A startup companies across the US, and hopefully a lot of them in the Central Ohio area. So for me, it's not only my personal journey getting to the side of the table where I think I can add a lot of value, but also solving a problem that I fundamentally believe exists in our society today. And if you look at how long companies are high growth startups are staying private, you look at the wealth creation that exists that's been concentrated into the hands of really the few who arguably are already wealthy or institutions that manage a lot of wealth. I think it's just really time to break this world wide open and give everybody access.
Yeah, that's awesome. So I want to talk a little bit about just kind of like the journey and like realizing the problem. So because you've been an entrepreneur yourself, I imagine you've gone through the process and been on the side of trying to find capital. Is that sort of how this idea formed, or like how did you sort of realize the opportunity here?
Yeah, so I'm a big believer in like solving your own problem, right? And a lot of great startups are built around this concept of entrepreneurs really kind of experiencing a problem and figuring out a solution for it. And when I set out to start, so I started my first tech company in 2012, and raising seed stage venture capital in Central Ohio was very challenging. It's still challenging today. It was even more challenging, almost a decade ago. And you had, organizations like Drive that were just, starting to come into the area, start to get going. We've had a ton of momentum, but I wasn't willing as an entrepreneur to move to the West Coast, move to the East Coast, and the mindset of Silicon Valley investors at that time was, we'll take a look at your company, but you have to move, you have to relocate. Now, thankfully, that's also changing, which is good. So a lot of the passion that I have for Zell Capital, in terms of really being able to get in and invest in entrepreneurs and help them grow, is because of that pain that I experienced in my own journey. I had to shut down my first two technology companies. And it's not because they weren't necessarily investable ideas. You look and you see, market equivalents on the coast that are achieving funding. So, the concept of being overlooked in venture capital because of where you live, because of your gender, because of the color of your skin is absolutely ridiculous. And I'm very grateful, and I believe more and more we're moving into a reality where all of that is taken off the table. You look at like Overlooked Ventures that just launched in Columbus, Ohio, Janine and her partner Brandon and the team they built out, and raising a fund, entire investment thesis around investing in overlooked entrepreneurs. And I think it's beautiful, and we need more of that. So, there's no defined objectives, if you will, in terms of Zell Capital, in terms of, diversity and how we'll invest. But that's the nature of who I am and the team that we're building. Is we're going to look for entrepreneurs that have chips on their shoulders because everything's been against them, and get behind them and help them build the next great startups.
Yeah, it's super interesting that there traditionally in the past has been that pull to like leave the community and go to the valley or the coast or wherever. And do you see that I mean, you're kind of part of the change, but do you see that changing now, especially now that we're kind of in like a remote world?
Oh, absolutely. And I think one of the more interesting things, and I get why you would want to go to Silicon Valley. And it's a very hard to like compare like any place to that. It's a really, really interesting, beautiful place. And it's because they're in like the 8th or 9th or maybe 10th cycle of their ecosystem, right? Where if you go back, you look at the last 40, 50 years, it's just been basically this turnover of an ecosystem that's developed over time. It's become this kind of culture in this region of the country that just, technology thrives, exists, is risk is cultivated and nurtured and encouraged, and people just go for it. What I think is interesting when you look at, a city like Columbus is we're maybe like second cycle, if you will, maybe third. And I think, I think comparatively that, what was going on in Silicon Valley 20, 30 years ago, you're starting to see this here. And what's interesting in the day and age that we live is I think it's a much more accelerated. We're in a time of exponential technology. So I think that in terms of the development of technology communities, tech communities, we're going to see an acceleration. I mean, it's very hard to argue against what has happened in Columbus so far in 2021 when you look at hundreds of millions, if not a billion plus in venture capital raised by startups. Like, it's incredible, and we need more of it.
Yeah, it's been pretty wild. I've been in the startup community since like 2013, and I haven't seen anything like this. And I'm sure you would say the same.
Yep.
And so it's really awesome to see. But I want to talk to the point that you made, which was about being able to take risk and failure. Because in startups, they always talk about, well, some people talk about you should fail fast, but it's almost like if you come from a place where there's not enough capital, it's like fail fast, but don't fail with my money.
Right. Exactly.
And so how do we get around that? So like in terms of like what you think like the sort of ecosystem needs, like and like where do you like envision us going? Like what do you kind of foresee? I know you mentioned like some general objectives for Zell Capital and stuff, but what do you think this will do in terms of like the startup community?
Yeah, so I think I'll speak from the entrepreneurial side and then from the investor side. So on the entrepreneurial side, I think what needs to happen is happening. And I think it's going to be, the next decade is going to be really interesting because you have now not only the entrepreneurs and teams that are building high scale startups in the city, but you have the broader teams and employees underneath them that are being inspired by this journey of like, man, I started when this company had 11 people and now we have 300 people and we've just raised, hundreds of millions of dollars. And that is Silicon Valley, right? Is that like in that turnover of the ecosystem, you have a small percentage of people who go through that experience and say, you know what, I can do that. I'm going to go out and I'm going to, search far and wide for a problem to solve, and I'm going to start a business and try to solve a problem. And so in this turnover, I think you're going to see a multiplication of entrepreneur or people who are entrepreneurially wired and for a number of different reasons haven't taken that step yet. They're going to take the step and say, all right, I'm going to do this. So what we need to match that, from my perspective, is we need more early stage risk capital. We need more people who are either founders, so they get it and they've lived it and they're willing to invest with conviction on somebody who there's a decent chance that they'll fail, or we need or we need more I would say Silicon Valley mindset type investors that get it, right? But I think the key is in the early stages. I think just general trends in venture capital, once you're in the growth stage, it's going to be a seller's market as an entrepreneur for quite some time, just because there's a flood of capital that's coming in. But in the early stages, before you have the metrics to prove scale, before you really have that product market fit, it's still very much a bet on individuals and on small teams of people to build success. And the more risk capital, the seed, pre-seed, even Series A that we have in the city, the better it's going to be, in my opinion.
For sure. Also, just to kind of understand the Zell Capital a little bit more too. So if I'm an individual and let's say I want to invest, again, not financial advice, but like, how does that work? Do I just send you like a check through your website? And do I get to pick the companies? Tell us a little bit about the mechanics of it.
Yeah, so it is a proper fund. So individuals invest into the fund, that capital is pooled, and then we have an investment team, myself and the team that I'm building, that lead the investment strategy and make the investment decision. And then we work with the portfolio with the entrepreneurs that we invest in. So the individual investor in Zell Capital does not make the investment decision. With that said, one of my dreams is, how do you invite the community into this world, right? Like, I know hundreds, if not thousands, of people over the last decade that are connected some way to the startup community, right? They've worked in startups, they're a service provider to startups, whatever it may be, just across the board. And part of the inspiration around Zell Capital is like what that community of people have not been, is they haven't been investors in startups, because they're really, unless in today, a startup could go and do equity crowdfunding, which is fantastic. I support that. Unless a company goes that route, there's really no way to build startup investing into your portfolio. And that's one of the things for me that, when I look at, Zell Capital, not only getting in and helping the entrepreneurs, but a big part, and it's in all of our prospectus, is we want to build a community of investors that are engaged. They're not making the investment decision, but they can come along for the journey and know that, hey, when we invest in this startup, this is the problem that the startup's trying to solve, and here are ways that you can help them. Because startup investing, it is investing, right? So there's an expectation of return. And you have to understand just the distributions of risks and power laws that are at play that lead to long-term success. With that said, there are benefits and there's value to be derived as an individual investing in startup beyond just the outcomes, financial outcomes. And the analogy that I use is, Lucas, if you walked into the grocery store and you bought a case of Coca-Cola, there's no one from Coca-Cola that is going to stop and give you praise. There's no one that's going to just celebrate the fact that you just bought a case of Coca-Cola. Well done. You're amazing, right? I'll ask Naveed. Naveed, if you had somebody today who came and said, hey, here is a customer I want to introduce you to, some random, it doesn't matter who they are, for you, is that something that you celebrate, or is that something you just kind of pass off, right? Is that a big thing for you, or is that a minor thing?
Oh, it's huge. And we'll be best friends forever.
So that's the beauty in startups. Like the first dollar we made at Nikola Labs, you have no idea how excited we were. And those are things of legend. Those are things that I believe are really important when it comes to the fundamental wiring that is the United States of America that binds us all together, right? And I believe there's so much opportunity to connect the community to the entrepreneurs, and let's just have fun, and let's endure the roller coaster ride, because there's ups and there are a lot of downs. We're going to see failure, we're going to see success, but let's go on this wild journey together. And that's what I hope the Zell Capital experience is. Now, functionally speaking, to your original question, right now you can basically go to zellcapital.com and an investor can create a profile and make an investment. I will say, please don't do that right now, because we are ourselves are a startup, and coming out of the gate, there are things that we need to fix. We're actually swapping out the investor onboarding experience this week. Hopefully it should go live, just to streamline it, just to make it simple. I'm a big, I'm very focused on creating a great user experience. And if it's not living up to my standards, then we have to make changes. So we're in the process of doing that right now.
Gotcha. Do you, in terms of on the other side of it, on the recipient side of it, how do you have a specific, I know you mentioned seed and Series A, do you have any kind of specific verticals or things where you're like, okay, we're going to focus in on this particular area?
Yeah, so it'll be tech and tech enabled, and tech enabled allows you to look at, a broad set of opportunities. I'm more of a generalist entrepreneur myself. So if you look at the startups that I've launched, everything from real estate to media to wireless power, right? Mm-hmm. So so just my wiring, and there are specialists and there are generalists. I'm much more of a generalist. Now I do have a very specific filter, a very specific investment thesis that I kind of work everything through. That becomes a pretty narrow filter. But I think I would give it, so like if you look at like a Drive Capital, incredible firm, what they've done is just amazing, but they're very much a thematic investor, right? So they're going to look at the world, they're going to do research, they're going to have kind of this internal conviction around the big opportunities that they see, and then they're going to go find startups to invest based on those themes, which is fantastic. With that said, that if you don't fit into a theme of a Drive Capital, you got very low probability of being receiving investment from them, and they'll be the first to tell you that, right? And so what I believe that the community needs is that kind of early stage capital that's more generalist. It's still, we're unfortunately going to say no a lot more than we say yes, but is willing to look at entrepreneurs that are starting companies in diverse industries. So that's a lot of and we need more, right? We need more specialist early stage. We need more generalist early stage. We just need more, frankly. And we could have 10 more funds today actively investing in the region. And I think, that is going to become a really important part of this next cycle that we're in as an ecosystem.
Gotcha. So I want to talk a little bit too, because you mentioned all these different things you're doing, like you've done wireless power, real estate, and now doing the sort of VC side of things. Like, I guess, like, how do you kind of compare the experience of, doing like real estate investment versus being an operator versus being like a, VC? Do you feel like you're doing the same thing, or are you like completely fragmented right now?
Yeah. So there are a lot of ideas I've had and kind of businesses that I thought about starting that haven't made it to LinkedIn yet. So I think any entrepreneur will tell you that, like, out of 100 ideas, you may pursue one or two for a little bit. So real estate's interesting because it was the kind of easiest business for me to start when I was in my early 20s. It was where opportunity presented itself, and there was a level of comfort that I had around it. With that said, the real estate business was kind of the first business for me to cut my teeth as an entrepreneur. I would say I started that business more as a philanthropist and then ended it as an entrepreneur. But that journey was really, really important. And what it kind of teed up was this just personal evolution I had more towards tech and technology enabled startups, which I started my first in 2012. So when I kind of shifting away from real estate and focusing on tech, it's in many ways there have been very different types of companies, but a lot of the execution is the same, right? A lot of the kind of my how I go about like really diving into an idea, becoming curious about it, and then figuring out if it's something that I want to give my blood, sweat, and tears to is pretty much the same regardless of what the industry is. And interestingly, it was the same with Zell Capital. And that, I want to reiterate that Zell Capital is very much a startup itself. We are like, what we are doing is likely the first time that this type of structure has been put together. And there are just frankly a lot of things that we're managing through as a startup. Like you can never avoid as a founder or early team member in a startup that like the constant thing that is going to be in front of your face is everything that's broken. And it's stressful, and you just have to manage through it. And that's where we are as an organization. So, which again, I like it because, it's everything drives towards empathy for the entrepreneurs and the startups that we're going to be investing in because we're experiencing it ourselves.
So I was doing a little bit of research on you. One of the things that I read was that on some level, and maybe this is not all encompassing, but on some level you think of creating businesses almost in like an artistic sense. Would you say that that's accurate?
100%. For me, it is a creative expression, and the business, the organization is your canvas, and masterpieces can be built.
So I feel like that's kind of a deep sort of comparison between what is traditionally seen as somewhat separate worlds, the world of art and the world of business. And I was wondering when I read that, were you always creative? Did you have other sort of creative kind of impulses, like maybe music or like fine arts or something like that? Or how did you sort of start to think about it in those terms?
Yeah, so music, I played the trumpet coming through school. I always had a love for music, switched to the euphonium, if anyone knows what a euphonium is. So I've always been connected to creativity and really primarily through, I would say, music more than art, if you will. But with that said, whether you're a musician, an artist, a sculptor, a business person, an inventor, like the idea and the process of taking something that starts as an idea in your head, right? And actually figuring out how to manifest that into something that is real in the world is incredibly challenging and 100% creative. So it's, for me, from a business, from a entrepreneurial perspective, the output, in one part is the product or the service that you deliver to the market, but the masterpiece, the piece of the great artwork is beyond that. It's the culture, it's the team, it's this like concept of how you create an organization that persists over time. And in some ways, it's significantly more complex than a piece of art, because you're dealing with other human beings, right? But with that said, if you look at the great artists, like if you read Da Vinci by Walter Isaacson, and like just this incredible individual that literally would have a piece of art, a painting that he was working on, a work of art that he was working on, that he would work on for years, and would start it and stop it, and it had complexity, it had layers, it was driven to this very, very, very specific idea that he wanted to manifest in this world. And it was relentless until he made it happen, or not, or he just had a bunch of paintings that just were never finished. And I think in many ways, the entrepreneurial journey is just like that. I view, like, if I look at a company like Nikola Labs today, right? So where we are today is very different from where we started. And that journey was a significant amount of creativity in developing this organization and going up against the forces of the marketplace and the forces of what it takes to bring disruptive technology to the world, and then getting punched in the face because it doesn't work, and then how you shift and move from there. Getting to this point now where you've got a thriving organization of dozens of employees that are connected to this concept and this vision that you had a few years ago, and this company that you named, and now it's thriving and growing. Like it's just a beautiful thing. It really is.
Yeah, it's such an interesting kind of analogy comparison. Um, one of the things you mentioned earlier is that as a founder, it's hard to look past all the things that might be broken at an early stage. And as an artist, you might identify with your art. And I know that the same thing happens as an entrepreneur. So when everything's broken and you're identifying with, okay, this is some creative element, in some sense, it's an element of yourself that you're putting out into the world. Like how do you kind of balance that and manage that as somebody who is creative but also kind of has to take a step back from the work as well?
Yeah, so it's probably one of the kind of key piece of advice I would give an entrepreneur today, and something that for myself becomes this thing I constantly remind myself of, is that like in that process, there's inherent friction. It's going to happen, right? And there's this struggle, and it is often a reflection of self, because you're trying to overcome every barrier that stands in your way to bring this idea into the world. And what I remind myself of is that even in like the most challenging aspects of that journey, everything is there to serve me in the pursuit of manifesting this into the world. So all of the good days, right? All of the wins, and the very worst days, right? All of the losses. So in this incredible roller coaster journey of building a startup company, everything is there to serve you. If you look at it from that perspective, you'll figure out how to extract positive value from the challenges that you go through. And it's a concept, it's called being anti-fragile. I don't know if you read Talib, Black Swan, Fooled by Randomness, Anti-Fragile. And the concept of being anti-fragile is that when something is exposed to friction or to chaos or force that is there that would otherwise break them, when something is anti-fragile, when it goes through that experience and it doesn't just withstand the force, it actually gets stronger, right? And in entrepreneurship, 100% of the time, you can always expect it to be a process that will have many things that are there to try to break you. So how do you, in your mind, how do you in the team and the culture that you build, how do you create this resiliency that with all of these challenges that come our way, we're not only just going to try to withstand it, but how do we actually get stronger? How do we push back and actually move forward in a stronger way than what we were? And like, it's easy to say like, okay, that's great, Will, but I'll remind everybody that I say that in the context of actually going through the worst outcome as a business with the first two technology companies I started, which was I had to shut them down, right? So this is in the context of being an individual trying to go on that journey and it failing. So the question then is, what do you do next? And my response is that failure was there to serve you as you pursue your dream, as you pursue this path that you're on as an entrepreneur, as you pursue and try to figure out how to actually pull this off of taking ideas and manifesting them into real businesses in the world. Everything is there. Or if it's going from doing the startup thing, going through the pains of it, learning and shifting into some other career, like everything in that process can be there to serve you as you're on your path and on your journey as a human being.
I think that's super insightful. And I don't want to make a sports analogy because I typically hate those, but it kind of reminds me of like almost like the boxer or somebody who loses a fight. They always end up learning more from the fight that they lost than the fight that they won, just because there's something you didn't expect, it hurt, and you tend to remember that. And so on some level, is that kind of what you're talking about, where you have these failures, but you leverage them in certain ways, so okay, now I have the foresight to see that particular route would lead to this particular outcome or something like that.
Loss is the greatest teacher.
Yeah.
And I'm all for winning, just so you know, like I'm very happy with success. But loss has been a great teacher to me. And tying that back to startups in the startup community, it is one of the reasons why we have to empower entrepreneurs to just start and go after it. It's what, again, tie back to Silicon Valley of the whole approach that they have to failure, right? Because a person investing in me in business number 3 was like great investment, right? 1 and 2, not necessarily the greatest investments, but what you find in Silicon Valley is that I find an entrepreneur that is like they're going to figure out how to make it work, and we support business number 1. And if it fails and they did good and they're honorable and they're ready to step up for number 2, then let's get after it. Because I know that entrepreneur executing in business 2, regardless of the outcome of business 1, it could have been a success, could have returned, the investment, could have lost. I know without a doubt, though, they step up for number 2 and they're going to execute better. Step up for number 3 and they're going to execute better. And generally what that means is de-risk. There's a significant, entrepreneurs learn how to de-risk an idea and execute significantly better and faster with capital that they're given the more times you go through that cycle.
For sure. I was wondering if you think is it easier the second or third time around to start a business, having gone through it in the past? Because I think there's definitely some advantages, but also it throws a wrench into it a little bit if the first one didn't go well, right? So do you think it becomes easier over time to be an entrepreneur?
I think you have to build the right mental models, right? Yeah. You've got to learn how to take, how to learn from failure, right? Or how to learn from loss, or how to learn from success, right? So you've got to be able to because again, when we talk about a business failing, let's say a startup failing, that's the final loss. But on that journey from where they started to where there was, let's say, a final loss, there were a bunch of wins likely. There are a bunch of smaller losses, right? Just the ultimate outcome happened to be a loss. And there could be a number of reasons. There are a ton of reasons for any startup company to fail. And they can be beyond just, entrepreneur and team's ability to execute. And so for me, it's building out the mental model to really take time to learn from what that experience was, the good, the bad, the ugly. And then how do I think about applying that to the next thing that I start? But without a doubt, the next thing you start is going to be wrought with challenges as well. I always tell entrepreneurs, the first thing that happens when you start a business is the market that you're going into is going to punch you in the face. Actually, I use the boxing analogy that the very first thing that's going to happen is the market's going to punch you in the face, and it's how you respond to that initial blow and react to it that kind of sets the tempo for the match that you're in. I think the ability to understand. And again, I'm going through this with Zell Capital right now. There are things around the launch that I just was not happy with. And that was getting punched in the face. And now we're coming back and all right, what do we need to reset? What do we need to adjust? How do we create a much better experience? How do we work? Because what I have different in Zell Capital versus any other company I've started is this really kind of structured regulatory world that kind of limits my ability to move as freely as I otherwise would.
That's super interesting. And I'm kind of curious about this too, because it's in a way, this company was born out of regulatory innovation, right? Because it's a new class of investing, or is that how you would put it?
So one of the most interesting things about Zell Capital is we worked and delivered innovation within existing law. So there's Reg CF and the Jobs Act that started equity crowdfunding, but that legislation actually excludes funds. So a fund can't launch through Reg CF or Reg A. So it allows an individual a company to raise capital from individual non-accredited investors, but it didn't solve the fund-based strategy. So, and I saw a regulatory opening up for this kind of in the 2014-15 time period. And what we worked was within the context of existing law. So there weren't new rules that had to be created. There was not new law that had to be created that enabled this. We actually found a way to work within the existing context, which was a lot of the, I would say, kind of product development innovation.
Oh, that's awesome. I had no idea that that was how you did that. And, because you might think, okay, if it's based on some sort of regulatory innovation, like maybe that adds additional risk, but it sounds like you found a way to work within the existing legal structure to do this.
Correct. It's just, and within that legal, so I don't come from that legal world, right? The world of mutual funds, the world of interval funds. So as an entrepreneur, when one of the things that every startup needs, because it is one of your greatest tools against incumbent in an industry, is speed, right? So you've got to be able to move fast, and that often is, again, a great asset. So in highly regulated industries, one of the biggest challenges, whether it's medical devices or really any heavily regulated industries, there's just these regulatory processes that restrict your ability to move as fast as you want. So like a lot of the dancing, if you will, that I'm doing in the ring right now is figuring out, like, all right, how do we get around this? How do we adapt to this? This is the game that we're in. So how can we create a great investor experience? How can we communicate effectively what our vision is and what we want to achieve over the long time? And most importantly, how do we support the entrepreneurs that we invest in the ways that we want to?
That's awesome. Well, it sounds like you have a lot on your plate, so to speak. So let me ask you this, and I'll make this my last question. And I realize there's like a billion chats in here, which we'll get to. And also we'll open it up for questions, but as far as the community goes, how can sort of the community help you? Are there any problems that you think, we can help with resources or, connections, or, I know you've been in the startup community for like a decade, so, but yeah, floor is yours if you have any asks or anything that you think we can help you with.
Yeah, I mean, honestly, for me, it is a lot of the anticipation or the desire that I have in building this is like an invitation to the community, right? Because in recognizing that it takes time to build that type of community, but this is something that we all can participate in. And I have a lot of curiosity around how. So if you look at a traditional venture capital fund that may have 30, 40 limited partners, institutions, people who have certainly have networks, and a lot of VCs want to talk about how their LP base can create value. I start thinking about what does a fund that has 5,000 or 10,000 investors look like, and if we can understand how to activate that community of investors to the benefit of the startups that we invest in. There's a lot of experimentation, a lot of things that we'll try that won't work, but if we can figure that out, then I think it's just it is in our perspectives as a competitive advantage that we believe we can create. It's kind of, if you think about how you create network effects within a venture capital type fund, leveraging the investor base, it gets super exciting. So I think all I would say is we're a startup getting out of the gate. We're going to have our own ups and downs. But I just want people to get to know me. I want to be very accessible and want people to take a look at whether or not, obviously within the context of startups are highly speculative, very high risk asset class. You should only ever think about investing a small percentage of your portfolio in it, and enter it eyes wide open. Within that context, let's make it happen.
Awesome. Well, I do want to open it up for questions. I see there's a bunch of comments in here. I would like it if people could just unmute and ask their questions. So, Doug Maxiner, do you want to unmute and ask your question if you're still here?
Yeah, still here, still liking the conversation. Thank you. Yeah, I guess with my understanding is with some investors, you get certain resources that they have available, such as expertise, I guess, is probably my biggest concern in certain areas. How do you address that? I know you said you had some things along those lines, but I didn't know if you could get more specific.
Yeah, so first and foremost, when you look at just kind of and thanks for the question, if you look at just the fundamental building blocks of the startup journey where, 60, 70, 80% is going to be the same regardless of industry they're going in. That's for me as an entrepreneur where I can come in and add a lot of value, right? How do you think about messaging? How do you think about how you position your pitch, whether it's to other investors or to the market? With that said, and it does actually circle back to the investor community that we want to build, is that, and the Zell Capital will play this kind of community manager role of being able to understand who's in our investor community, what they're good at, how they can add value, and try to match that with what startups need. Now, it's going to take time. Again, this is not something that we're going to build overnight, but I think one of the really valuable things that we can create is understanding that in a group of 1,000 people or 2,000 investors in this fund, what are the 10 or 5 that have this particular industry expertise that a startup is going after. So that's again kind of more of the long-term vision. At the outset, we'll just do everything that we can as the team and the network that I have to help the companies that we invest in win.
Awesome. Great question, great answer. Does anybody else have a question for Will while we have him on the line? Feel free to unmute. Do not be shy.
What's the ideal candidate for investment? I know you're willing to consider multiple stages, but if there are folks on the session here or otherwise people we could introduce or send your way, what are you looking for?
Yep. So at the seed stage, and I'll kind of break this out, seed and Series A. So at the seed stage, we're generally thinking about, when we go to invest, we want to target a minimum investment of $250,000 and upwards, to let's say $750,000. So at that stage, you're generally looking for the beginnings of validation in a market. Now, I'm very comfortable kind of looking at what a startup has, and probably not generating revenue or very little revenue. It might be proof of concept revenue at that stage, or just the beginnings. But I want to see some type of product that has either been launched into the market and is just getting going, or is about ready to get there. And again, that will look very generalistic at that. On the Series A side of things, you're looking for, I would say, pretty standard traction company that's already out there generating hundreds of thousands of dollars in revenue. And I would say we want to fill our fund with both a mix of companies where we lead investment, but also where we just follow along. So I would say if you have startups and startups that you think are awesome, and they are raising $1 million in a seed round, and they've got lead investor and half of it committed, we'd love to look at those as well, because we want to really start building out the portfolio with startups that we love and support pretty quickly.
And a follow-up question, and I'm going to put you on the spot, so feel free to redirect or say no. Partly because an entrepreneur I've been advising, I've been debating with him a little bit, because he has this idea of X money for Y percentage of the company. And I've been talking to him, and I'm like, well, you're at this stage, and what you're thinking here probably isn't aligned to how the market or a lot of VC looks at things. So it'd be worth reassessing. In your case, do you have a standard term sheet, like a level of investment for how much of the cap table at seed stage, or is that more a negotiation depending on the deal?
Yeah, it's more of a negotiation depending on the deal. I am comfortable investing in safes, and generally at the seed stage, actually, I'm a big believer of not trying to put a value on the company at the outset. So whether it's a safe or convertible note, something that allows the investors to model out what their upside is going to be, but you're kind of punting the pricing of the round to a little later. It's a crazy market right now in VC, and I don't think it's hit kind of early stage, especially in non-coastal regions. But it's definitely a seller's market. If you're an entrepreneur and you've got traction as a company, now's the time to raise a good amount of money. And I think, it's there are a few investors that I like and follow on Twitter, and they're like, this whole industry, we've lost our pricing discipline. Everyone's just chasing deals. So I think if I put my entrepreneurial hat on that, you need to understand, where you are in that market cycle. But you also need to understand that within the context of, let's say, a community like Columbus, where there just is not an abundance of early stage capital, that there's going to be a little bit of give and take there. But I do look at it on a case by case basis.
Good stuff. Great question. I see a hand raised. Phil?
Yeah. Hey there, Will.
Hey, Phil.
So I have a question about basically your thoughts on being like a solo leader around, especially thinking about some of those kind of like RBF, revenue-based financings, or some of the kind of more unique kind of first rounds in some of these companies. What are your thoughts just in general on being the only investor in a first round of capital into a company? And I know you mentioned, being happy with co-investing, but just curious about your thoughts there.
Yeah, so we've got to get capital under management to be able to fulfill what I'm about to say, but I've got no problem being the only investor in the seed round. And there's what I'm trying to do, because I believe that VC itself is rapidly changing. So I'm trying to enter into this world without, I would say, a lot of the pretense that has existed in the status quo. And so if a startup is, wanting to do a Reg CF fundraise to raise capital from their community, and alongside also raise, from traditional venture, it's fantastic for me. If you're looking at doing partial equity, partial RBF, or some type of other debt and debt-like investment, that's also great for me. If you read our prospectus, we anticipate about 25% of our investments being non-equity focused. So, I want to start kind of broad in the playing field. I do believe, and I anticipate there will likely be some sort of narrowing that happens in our focus and how we execute investments, as we understand the value that our investor community can deliver, right? So if we find, as we build out our investor base, and we can more meaningfully move the needle, both for our own, outcomes, as well as for the companies that we invest in this particular type of business or these particular industries, I think that's, if you ever see a narrowing, that's where it'll be. Otherwise, I just, the change of pace in venture is so rapid right now, that I want to be pretty flexible.
Good stuff. Great question. All right. Do we have other questions for Will? Any entrepreneurial questions, journey questions? Could be anything. We have him captive, so do not be shy. Oh,
Sue. Yeah. Hey, Sue.
Yeah. Hey, Will, how you doing? Yeah,
Fantastic.
Sue Graves here. Yeah, thank you for your time. Great job. I come from an entrepreneurial family as well, so it's exciting to hear you talk about your history of your family. But what's the best way to connect with technology companies? I'm the chair of the Ohio Hotel and Lodging Association's brand new Innovation and Technology Committee, and we're trying to bring technology companies into the service sector, into the lodging industry space, where oftentimes in its current state, most of the technology is being developed for manufacturing, warehousing, logistics, and they're just now getting into healthcare. And the lodging industry seems to be left behind. And I'm trying to continue my advocacy for lodging, where we create so much economic impact. 1 of 9 jobs is in the lodging industry, and nobody's talking about it. So how do I connect with technology companies to invite them into my space?
Yep. So I would say actually start with Twitter.
Okay.
VC Twitter is just this crazy world. And you'll find pretty quickly the type of people, the people you can follow, and it's just a very welcoming community that you can engage in, and startup kind of tech Twitter.
Yep.
So I would say that there are some broader organizations. So Lolita Taub is someone that I admire quite a bit. So she created a kind of investor startup matching tool. So I think it depends. Do you know, in your role, are you going to be actively making investments in startups, or you're just trying to find startups that solve industry problems?
Both.
Okay. So if there is an active investment element, I would check out Lolita Taub, and you can email me at wzell@zellcapital.com, or DM me on Twitter, and I'm happy to make some of these introductions. I'll put together a list for you. There are a few, I would say more aggregators that you could connect to that could help you find, hopefully people that are actively serving that industry.
Thank you, Will. Ideally, I'd like to, I have a pretty diverse committee right now. I'm looking for a manufacturer to join the committee because I've entertained so many, over 50 technology companies that I found on my own. Most are outside the state of Ohio. And I'm trying to get them to produce their product in the state of Ohio. So that's why I need some help. I need some help connecting. Yeah.
Yeah. If you just shoot me an email and kind of give me the specific things that you're looking for.
Yeah. Cool. Thank you so much. Appreciate it.
My pleasure.
Good stuff. All right.
I have a quick question for him, if you don't mind.
Go ahead.
As an investor, if you come across like a company that may have a great concept, but you don't believe in the team that's like trying to execute it, how do you handle that? Or vice versa, you come across a company that has a great team that you believe in, and maybe the concept something that you don't believe in. How do you handle that?
So on the great concept, not great team, I wouldn't invest. On the mediocre concept and great team, I would likely take a stab at it.
Yeah.
So now there's, and I'll say all of like within that context, even on the second, like you still say no to the vast majority of things that you say yes as you dive in, towards the actual investment decision. But I just fundamentally believe, especially in our region, that we need to bet on entrepreneurs that inherently will figure out how to create value. And if they don't in that first one, then invest in their second business. It's hard, especially it's hard in the early stage to love a concept and not have conviction around the team. It really is.
Yeah. And also on the concept side of it, early on concepts can be refined significantly over time. And it's really hard to predict what, an initial, MVP might turn into if you have a really great team behind it that'll find the problem and find the market and that sort of stuff.
Absolutely.
Good question. By the way,
That's
Jeff,
a great question. Thanks, Jeff.
I see you got Starry Internet on your, I've seen that around town. What is that?
We're a new, like next generation internet provider coming to Columbus. Just going to be competing with like Spectrum and AT&T for residential internet.
I hope you win. Please win.
Yeah, seriously.
We're doing pretty good. We kind of kicked their butt all over the country. So we're just waiting to come to Columbus and do our thing here.
Nice.
Love it.
Welcome.
Completely unsure why like the default has been a terrible user experience in that industry. So please win.
Yeah. Good stuff. All right. It is 6:59. We can do maybe one more if there's one more question. All right. Well, if there's no more,
Hey, everyone. I did have a quick question.
Okay.
I wanted to know, sometimes at our firm, we work with companies that have great ideas. And like you mentioned, it really does center around the team. It's really central to the success of the project. But I'm wondering, what happens if you come across just one founder that really just stands out and they're by themselves? Would you still finance or fund that company?
Yeah, sure. Yeah. So I think very quickly in that journey that you need to find, a team, right? Like you need to start building it out, and that's in kind of figuring out how to build out that early team is something that I feel like it's strategy around that is a way that I can help entrepreneurs that we invest in. But yeah, I'll look at a solar founder for sure.
Got it. Thank you so much. I really appreciate the content for today.
Pleasure.
Sweet. Well, thanks everybody. Thanks, Will, for coming out and
Thank
sharing
you.
your experience. This was great. And yeah, thanks everybody for coming to Startup Grind. We'll see everybody soon.
Thanks, everybody.
Thank
Cheers.
you.
Thanks for doing this.